Since the CPI came out last Wednesday, we've been examining the different areas where you buy the different things and how those prices have changed over the past year. Some have fallen, others remain elevated, but almost nothing has risen as much as car insurance, up 16.5%, more if you look back over the past couple of years. Contessa Brewer joins us now with a look at all of these price hikes, which are, we should add, Contessa, paying off for the stocks here.
Yeah, I mean, that's the upside, right? Investors are seeing a return on their investment, but it's clear Americans are getting sticker shock when they're opening their insurance bills. We continue to see car insurance going up, though it's going up at a slightly slower pace. The Consumer Price Index for August shows 0.6% increase over the previous month. And as you said, Kelly, 16.5% over the previous year. Auto insurers, though, are just playing catch up to the spike they saw in 2022 and 23 in the costs to repair and replace vehicles, as well as, what it costs to fix someone who gets hurt. Property insurance, we're seeing a similar story. In fact, Moody's shows a 17% increase in property insurance in some markets over the past few years, where normally it increases 2 or 3%. It's especially troubling, Moody's says, in commercial real estate, where cost and availability is killing deals. I saw that firsthand. You saw it triple in price for a Texas multifamily property, and he says, hey, that killed my profit margins. Marsh, though, is showing property insurance moderating, just a 2% increase in the second quarter. It also reports that casualty insurance rates increased 7% if you exclude workers' compensation. And then umbrella or excess liability risk, those rates increased for companies 10%. Some lines, though, are seeing declining premiums. 83% of companies have seen a reduction in what they pay for directors and officers insurance over the last couple years, according to Woodruff Sawyer. And the trend is beginning to reverse. They say that going into 2025, you might see slight increases. Cyber insurance, single-digit percentage declines, even though ransomware attacks are higher. But companies are learning better how to mitigate the impact. Property and casualty remains the pain point. Insurers have been unable to raise rates fast enough to cover their payouts on claims. And when that happens, they just leave the market, which makes availability tougher. Look at California and Florida. Marsh says overall in the second quarter, insurance rates, all lines here, rose just 1%. It sure doesn't feel like that, though, when you're opening your own car insurance or home insurance bill.
Contessa, we were just chatting about this around the table here, but do you know how many people are now trying to go without, for instance, home insurance? I guess on auto, you're not really supposed to.
Look, what happens if you have a mortgage, the bank demands that you have insurance that's going to cover the cost of repair and replacement, and that can be very expensive. If you don't have a mortgage, you don't have to do that. Chubb, for instance, is seeing great opportunities in what's called excess and surplus lines, meaning the California regulator doesn't want to approve the rates that you think you need in order to really cover your risk. And so you go outside the regulated market and you pay whatever you need to pay for this, Cadillac of insurance policies. And that is for AIG. For other insurers, those excess and surplus lines have become very valuable. And if you own your home outright, you might just decide, you know what, I'll take it as a loss because I can afford to rebuild.
Brent?
Contessa, it's very interesting. We talk about the insurance company self-selecting and pulling out of markets. But I do think you are seeing more and more consumers self-selecting and pulling out of the mortgage insurance as well as the auto insurance. Now, you're not supposed to. If you have a mortgage, the bank's supposed to be checking on it, and the bank will eventually catch you. But on the auto insurance, it's only if you get caught. So I think more and more consumers are likely viewing that to be discretionary spending and pulling back.
Although the system seems to be so automated now that, for instance, if you don't provide the proof of insurance to your when you register your car, they will yank your registration, and then you start getting tickets because your car's not registered. There seems to be some sort of automation at the state level now to enforce those insurance and therefore registration claims. But you're absolutely right, and a lot of people now are foregoing full coverage and opting just for liability. Exactly. So they're trying to bring down their price down wherever they can.